This could change everything. A recent event in the Middle East and the massive strike at US ports might knock the Federal Reserve's soft landing off the table and throw us straight into a recession. If you think this doesn't affect you as you are not from the US or the Middle East, we need to talk. These events could have a huge impact on everything, from stocks to gold, crypto, real estate, and more importantly, your investment portfolio. So let's break it down. I'm Daniel, and if you are serious about protecting your money in those uncertain times, welcome to this video. Right now, two major events are shaking the global economy. First, the Dockworkers strike in the US has shut down 36 East Coast and Gulf Coast ports. We are talking about 45,000 workers walking off the job, no new labor deal in hand. This is huge because those ports handle half of the US Ocean's import, and it's only getting worse. Florida, the Carolinas and Georgia, they are already temporarily closed due to Hurricane Helene. On the other side of the world, tensions in the Middle East have exploded. Israel and Iran are on the brink of a full-blown war, and Iran just launched its largest ever attack on Israel. We are already seeing strikes in Lebanon and Beirut, with over 1,000 people dead and over a million displaced. As the US and some of the Europe countries are involved as well, the threat of a global conflict is very real. Now here is why this matters for you. These events aren't just isolated problems. They are the perfect storm for something much bigger. Let's talk about the ports first. Every single day strike continues, it's costing the US economy up to $5 billion. Products aren't moving, shelves are going empty, small businesses can't get their supplies, and prices are about to shoot through the roof, especially during the holiday season. Think about it. Shipping costs will skyrocket, what will make some of the goods much more expensive than it should be, and that could cause inflation spike once again. Just a reminder that in 2002 a similar strike lasted 11 days and it took 6 months to fully recover from it. Now add the Middle East conflict to the mix. Iran's involvement threatens to push oil prices through the roof. You know, usually when oil prices goes up, everything else follows. Transportation, goods, services, and as oil prices rise, inflation rises too. What does that mean? The Fed won't be able to cut rates as they planned. That soft landing? Gone. We are talking recession, and it could hit harder and faster than any of us thought. Maybe you are thinking, Daniel, but I'm not from the US or the Middle East. How does this affect me? Well, let me break it down for you. The stock market isn't local, it's global. When inflation rises, markets get hit everywhere. Your investments in stocks, crypto, gold and real estate, they are all going to feel the heat. For example, higher oil prices will increase the cost of transportation. That impacts companies' bottom lines, which directly hits stock prices. Meanwhile, higher inflation means central banks worldwide could keep interest rates higher for a longer. That's bad news for real estate, as the borrowing costs rise and property values start to drop. And crypto, as much as people like to think it's a hedge against inflation, it's still highly correlated with market volatility. So if things spiral, don't be surprised that the Bitcoin and the other altcoins will take a hit as well. The bottom line is, this is not a local problem. This is a global issue that could shake up your personal investment portfolio as you would not expect. So what happens next? Let's take a look on some potential scenarios. If the port strike lasts more than a week, you will start seeing shortages in your shops and the inflation might rise again. Retailers will run low on inventory, businesses might have to shut down, and the ripple effect will impact the global supply chain. If the Middle East conflict escalates further, especially with Iran and Israel involved, we could see oil prices shoot up to $100 per barrel or even more. That would crush the Fed's plans to ease the rates, meaning the higher borrowing cost and a deeper economic slowdown. And the worst case scenario would be if those events compound each other and trigger a global recession faster than anyone predicted. And the worst part is, it could all happen before the Fed even has a chance to react. Alright, now as I laid out the risk, what can you do about it? First, consider diversifying your portfolio. Don't put all your eggs in one basket. As the stocks has the highest chance to take a hit, look into assets that tend to perform well in recessions. Precious metals like gold are one option, or even inflation-protected bonds. The key is to stay informed and adapt. Don't be caught off guard by these events. The world is changing fast and your investments needs to change with it. If you are looking for step-by-step guide on how to build a recession-proof portfolio, I have prepared this special portfolio with detailed strategies on my Ko-fi page. The link is in the description. That means in case you are serious about building your wealth or securing your portfolios, make sure to check the link in the description for more tutorials and access to my personal portfolios and its changes. Okay, but we are at the end of this video. We all know we are heading into uncertain times, but with the right strategy, you can come out on top. If you found this video helpful, make sure to subscribe for more insights on how to grow your wealth or securing your portfolios in today's economy. Let me know in the comment section what is your take on current situation of the economy, on the port strikes or the situation on the Middle East. But for today's, thanks for watching, have a nice day and see you all at the next video. Goodbye.